I make venture investments all the time. My track record's pretty good. Over the last 25 years, I've done well. Every time I make them, I realize since 1954, when they started tracking this data, is that 8 out of 10 will fail for various reasons. That reasons could be fraud, it could be bad executional skills, it could be bad markets, it could be pandemics, whatever it is, 8 out of 10 are going to fail. FTX is just another 80% failure. It's just another deal that went to zero. It doesn't change my life. It doesn't change what I'm going to do tomorrow morning. I've already forgotten about it. How can I not? I've got a lot of other stuff to worry about, i.e. the deals that are working, and I get to work with my team when we do the next venture deal. We're never going to get it right. All these years on television and all the crap you've gone through because of it. If you could start all over again, would you like to be more private? Do you wish you'd never done this?
Trump, despite the fact him and I are sparring today, he said two things to me that I'll share, which I think are relevant. Number one, he said, hey, listen, if there's 300 million people in the country, 150 million people hate my guts. But what about the other 150 million people that love me? Just imagine the things you can do. You got 150 million people that love you. Let's go with that side. Second thing he said to me, Reince Priebus was like dropping like Oppo research on me in the first couple of weeks of the transition. And Trump called me and said, wow, that was a really nasty article about you. He said, well, let me tell you something. He said, in about 2 weeks, they'll be writing a nasty article about somebody else, and no one will even remember the nasty article that was written about you. And I thought about that. He's by and large right, Kev. Shark Tank's Mr. Wonderful. But more importantly, at least for this podcast, he's the author of 3 best-selling books, Cold Hard Truth, Men, Women, and Money, and Family, Kids, and Money. 2 of those books sound like horror stories to me, Kev. I've read them, however. There was like getting a PhD in psychology. But let's start with the Cold Hard Truth. So what's going on to give people today? Give us some cold, hard truth. This is what your signature is. We've been friends for a while. Most recently, we've both been blasted in the media over our cryptocurrency investment. What's the cold, hard truth right now, Kev?
Well, in the context of the cold, hard truth with family, men, women, and money, let's go back there because it's timeless. The messaging there is timeless. And what I tried to, talk about is that family member that nobody wants to acknowledge. It's called money. When you form a relationship with, a significant other and you decide that you're going to take a shot at spending your life together and growing a family, regardless of, what your gender is or what your preference is, I don't care about any of that. At the end of the day, what matters is you are forming a business relationship because you have to somehow fund your family. And that is an obligation you have for the rest of your life. Love them, leave them, it doesn't matter. You have children, it gets even more important. And what I tried to do in writing that book, which I thought was going to be a very easy task, it took me over 2 years, the first book, because I really wanted to get it right, is to acknowledge at an early age that you've got to teach your children about money, and you yourself have to admit your own weaknesses associated with it. And what people do, and what I find so fascinating, the number one piece of research I learned on that first book is when I went to the divorce lawyer community and started asking these lawyers, what is the reason people seem to break up their unions between the 5th and 7th year in America, which is basically where 50% of marriages end in that time period? He said it's not infidelity. It's financial stress. People outspend each other. They don't understand each other's obligations. They get into really bad places with money, and that breaks up a marriage. So if you don't think money has a place in the bedroom, you're 100% wrong. It is the bedroom.
Listen, I agree with you. My parents, I like to tell people, are Catholic. So they put 300 years of fighting into a 65-year marriage. And of those 300 years of fighting, 299 and a half were related to money, Kevin. So I totally get that. But you're the cold, hard truth guy. And you have to be cold and hard and truthful with yourself as well as an entrepreneur. And what I find about entrepreneurs that have a high profile, that press has a tendency to magnify the mistakes more than the successes. So how do you deal with the cold, hard truths related to your own success and failures? And how do you deal with the press related to it?
Yeah, listen, I totally agree with you. And we both live in that world. What I've learned, and this is really a recent phenomenon, I would say over the last 3 years, this has come to pass, there's a great benefit to having celebrity and having social media, and it's a two edged knife in some sense, because if I want to support a business or an agenda or something it's important to me, my watch collecting, my guitars, whatever, I love to be able to communicate with the rest of that community on social media, and I'm very fortunate to have millions of followers, and I really enjoy that ability just to get up on a Saturday morning, play a riff on my guitar, and ask 7 million people what they think of it. I mean, it's a dream come true for me. I'm not asking them for any money. I just want, if they like the riff, do they should go in the song or not? And that's really powerful. And when it comes to business for the same sort of thing, here's a product I invested in. I bought it. I think it really works. It does one thing really, really well, like my Bratello pizza oven. It makes pizzas. Well, if I can tell 7 million people about it, the customer acquisition cost drops dramatically in some cases, and this is part of the whole Shark Tank phenomenon, to zero. So I can take a company that no one's ever heard of and get it in front of 100 million people. That's the benefit of social media. Now, the downside is, and this is the cost of democracy, the way I like to put it, the reason we live in such a remarkable country with such an incredible, fantastic platform for entrepreneurs is that we allow free speech. But the price of free speech is that the lunatic fringe, that 2.5% to 3%, they get to speak too. And they are very, very powerful when they have social media on their side. And so if you actually look at all the haters and the naysayers and all the negative stuff that happens on social media, it's about 3%. And the way I look at it is, they also deserve a voice. You may not agree with it. It may be the lunatic fringe, but it's free speech, and that's the price, and it's never going away. And I don't want to give anybody the power to silence it. I don't want somebody telling me what I can listen to and when I should listen to it. I would rather just let them be free. So what I do is I turn off the noise. My daughter says to me sometimes, Dad, how can you read these things in these people and not have it affect you? And I say to Savannah, I don't give a shit. It's that simple.
Yeah, well, you're better. You're a better man than me, Kevin, which is why I always admire you. I used to give a shit. And then the adage that what other people think of you is none of your business, I had to ingrain that into my habits. But I did give a shit in the beginning. Now I could care less, which brings me to a subject that both of us have been involved in. It's sort of an annoyance to me now. But we both were on the FTX situation as investors. We were both proponents of Sam. What do you think we both got wrong in that? Or where do you think we are in that? I know Sam. I know you have a relationship with Sam, and I know he pled not guilty. Where do you think things stand with the FTX situation?
Well, I don't know if he's guilty or not. I think he's going to have to stand up for his own name. I think he's in a very tough place. I think his family's in a very tough place, and that process will go on. But I think the bigger question is the one you're raising. What did we get wrong? And I think, and when I say we are in a group of some pretty lofty investors all around the world that got involved in this situation. And obviously, we got it wrong. And so what I tell people, that because I've been asked countless times about FTX, and I point something out that I've been living with for 25 years. I make venture investments all the time. And my track record's pretty good over the last 25 years. I've done well. But every time I make them, I realize since 1954, when they started tracking this data, is that 8 out of 10 will fail for various reasons. That reasons could be fraud. It could be, bad executional skills. It could be bad markets. It could be pandemics. Whatever it is, 8 out of 10 are going to fail. FTX is just another 80% failure. It's just another deal that went to zero. I don't like the reasons it went to zero, but it's just another venture investment that went to zero. It doesn't change my life. It doesn't change what I'm going to do tomorrow morning. I've already forgotten about it. How can I not? I've got a lot of other stuff to worry about, i.e. the deals that are working, and I get to work with my team and we do the next venture deal. We're never going to get it right. Now, we thought in the case of FTX, we had the due diligence because so much had been done by giant institutions. Turns out nobody could see this coming. And frankly, when it comes to fraud, you never see it coming. Fraud is fraud. That's why they call it fraud. If that's what it is and it's been alleged, nobody could see that coming. And so at the end of the day, this is going to get worked out. And there are, 400 lawsuits and all the rest of that stuff. To me, at this point, FTX is just noise. How can you not treat it any other way? You can't let it rule your life. You got to move on. And that's what everybody's done. However, it has set back the crypto industry dramatically, and you're well aware of that because you're a participant just like I am. And I think there's other shoes to drop. And I think it's very important over the next 2 years to clean all the rogue operators, all the bad guys out, all the non-compliant, all the opaque, all the stuff that made this happen has to go away, because the potential of what crypto can be is a great thing. And I want to invest in it, but I just want to get the spatula from the sky and scrape all the crap out of this industry, let the chips fall where they may, and start afresh, regulated, compliant, with the great financial potential it has.
So let's talk about that, Kev. You know, we have a combined 69 years in business together. Okay, now it's probably 70, but I like the number 69 better than 70. So we're gonna go with 69. Okay. You know, I mean, we were involved in the NASDAQ bubble. You and I were old enough to remember that when the NASDAQ crashed in 2000. We've seen the ups and downs of a lot of upstart companies, technologies, failures, etc. What do you think of crypto? Do we have it right? Do you and I have it right, or do the naysayers have it right? And I was listening to Peter Zahan the other day. He was on the Joe Rogan show. He says, well, Bitcoin only has $17,000 more to go until it gets to its fair value. We have it right, or do they have it right?
No, we have it right. And what we have wrong is the fact that we have let rogue operators take over this and scam everybody out of their money with all kinds of various schemes in multiple ways. And I think that has to end, because the challenge was it wasn't regulated here, it wasn't regulated abroad. And I think countries like Canada are getting it right now, heavily regulated, Switzerland, heavily regulated, UAE, putting the brakes on there at the ADGM, heavily regulated. And so, you know, going forward, think about payment systems. I've talked about this quite a bit. I'm a big believer in stable coins that are regulated. I think that will be a boon to the securities industry. I'm a big believer in blockchain. I'm a believer in the storage of value of Bitcoin. I own it. I bought some more recently. And so I think the big change is going to be is there's going to be what I consider, and this is my, you know, pathway forward. And I've been asked by regulators and by congressmen and by senators of late. As you know, I went and testified on the Hill. I've had lots of feedback from that. I'll tell you, here's one thing I know for certain, okay, that everybody should think about. These senators and congressmen on both sides of the aisle, having gone through the dance of getting the new Congress in place and all the craziness that happened last week, that's past us now. Now they can get back to business and try and do things on a bipartisan basis. And one of them is, these men and women are sick and tired of having hearings about the next crypto piece of garbage company that goes to zero. They're tired of it. They're weary of it. And they're sick of having their constituents lose all their money. They're really unhappy. And when that happens, they get motivated to do stuff. And so my anticipation is that they are going to do stuff, and they're going to be very forceful in bringing regulation to this. And so I think the idea of unregulated broker-dealer exchanges, I don't care where they are in the world, they're going to get stamped out like the cockroaches they are. That's what's going to happen, because there's going to be a passport process put in place. And the way this is going to work is, if you want to get licensed in some jurisdiction like the United States or in Switzerland or in the UAE or in Canada, all those regulators talk to each other. And you're going to have to be compliant in every single one of them, because crypto doesn't trade by jurisdiction. It trades globally. But if you want to have the banking system in that geography where you're applying for a license to be able to upload and download the fiat currency, in other words, how do you get money into your account in UAE or up in Canada or here in the US, you're going to have to tap into the banking system. That's already regulated. And the regulator isn't going to give you that ability unless you're a regulated broker-dealer crypto exchange. And that's how they're going to stamp it out. If you fall out of good standing in a jurisdiction like Canada, they're going to shut you down in the US. They're going to shut you down in UAE. They're going to shut you down in Ireland and Switzerland, because all those regulators are going to form a passport system. That's what I think is coming next. That's how they're going to do it. And so if you're an unregulated exchange now, any unregulated exchange, you better chop and figure out how to get licensed.
All right, I want to shift gears. I totally agree with you on that. This is related and laced into your books. You come from humble beginnings. I hear you quote your mom often. Let's go back to mom for a second. What was the one thing that has the most lasting impact on you from your mom?
Well, it's very simple. When I was a teenager, just became a teenager, she said to me, Kevin, if you always tell the truth, you'll never have to remember what you said. And I said, why would you say that to me, Mom? She says, because I know you're lying to me right now. And I was. And she said, because I know you're lying. And now you've broken our trust. And that's very, very expensive. Now, why don't you just tell me the truth and deal with it? And then I'll know you as not being a liar. And if you make that your creed and how you operate for the rest of your life, you won't get into the trouble you are with me right now. And she was 100% right. I learned my lesson in one big moment. And I've done that ever since. Now, it's not easy. I get in a lot of trouble and all the rest of that stuff because people don't like the truth very often. They would rather you lied to them so it doesn't hurt their feelings. I've learned you can't help that because the truth is going to come out eventually. And so that's how I've lived my life. I try and just tell the truth, and that's it. Now, I talk about that in the book. People have a really hard time with it. I mean, telling the truth means you got to tell the truth to your family and your business partners and your significant other in your relationship. And I use that example when I teach my business classes and engineers at MIT and places like Harvard, Temple, all these colleges. I say to them, look, in business, it's like being married. When you fall in love, you have this amazing period of time you're with somebody and you're building this incredible trust. And the idea of lying to them doesn't even occur to you. And then the relationship goes on. Maybe you get married and you get weak one night and you mess around. And then you have that decision to make. Do I go home and tell the truth and take the heat, or do I lie where I was? Here's the problem with lying. The truth is going to come out one day. It's going to slip out. And when that occurs, you will lose 50% of that relationship's equity forever. Forever. You will never get it back. There's no way because you can never be trusted because you're a liar. Versus going back and saying, I did something horrible last night. I was in a bar in a hotel and I was weak and I did this and I slept with somebody. I know this sounds incredibly difficult to do, but at least your significant other will respect the truth. And your marriage will probably survive and you won't lose the equity that you could have lost. And that's the lesson I give in class. But I also say it's the same thing in business. It's exactly the same thing in business. The minute you lose your reputation, the minute you lie, you've given up something it took you a whole career to build, your reputation, because now you don't tell the truth and nobody can trust you ever again. That's my whole point.
I mean, I think it is. It's brilliant. It's one of the reasons why I wanted to bring you on. I often tell young people, if you keep your integrity, you'll always have opportunity. So whether you and I are getting slammed on a deal or lit up in the press, the people that we've done business with, if they feel that we have high integrity, they'll always come back and want to do business with us. It's just about playing it straight. But let's talk about lies for a second. What's the biggest or the best lie that you've heard about yourself online? I can tell you mine.
Probably a lot has to do with, that I'm not being honest about my terms on deals, that I'm just being greedy.
Right.
I'm not greedy. I know what I'm worth. And when I ask for something, it's because I think it's well-founded and I'm happy to negotiate. But the amount of, heat I take for asking for things like royalty or cashback structures, the way I like to structure my venture deals, a lot of people say a lot of bad things. But what I say about that, and which has really helped me in the last 14 years, and I certainly put it in the context of Shark Tank as being known as the royalty guy, is why don't you talk to my CEOs before you close this deal? Why trust any of my staff? Why not trust and verify? Why don't you call up the CEO of a company that's been paying me royalties for 7 years and ask them if it's worth it or not?
Right.
I'm not asking you to do something you don't want to do, or a structure like venture debt or whatever it is. Why don't you go ask? And why don't they talk to you about me? And do your own due diligence. Nobody can believe I do that. I do it all the time. I don't have to sell myself anymore. I let my CEOs do it for me. And that's how I bring these deals to a close. Look, I do business the way I do business. If you don't like it, don't do the deal. But right. I get what I want more than half the time because I bring great value.
Well, yeah, of course, you're obviously adding value. People, and plus you're fun to be with. People want to hang out with you. They want to have that association. The biggest lie about me was on QAnon. They said when I got fired, it was some kind of like 3D chess conspiracy. Kevin, I swear to God, it was just me being an asshole at the White House got myself fired. Okay, there was nothing more dramatic than that. But anyway, I just thought that was fun.
Well, let's stay on that for a second, because
Yeah.
the the reason I admire you, because I didn't know you then, was I watched the absolute blowtorch you went through in the 2 weeks after that experience. I had never seen anything like it. You got fried like a chicken. It was unbelievable. And then, I mean, look, I want to call it out because you don't take enough credit for it. I mean, I had never seen, it was like an ant under a microscope on a planet where the sun shines 24 hours a day. You know, at least you get a break on Earth, but not where you were getting fried. And it was just unreal. And then to top it off, and this is where I said he's lost his mind, but I admired you. When you got into that tiff with Trump about, you know, things he said about your family.
Yeah, he went after my wife. I mean,
yeah, went after your wife. I wanted you to say it, not me. But I remember that, and I said, wow, this guy has, I mean, he's just, this dude's an Italian crazy guy. And I really admired that, and I knew that, you know, I could relate to it. But that was really a two humps on the camel kind of pressure cooker for you.
Yeah. Well, I appreciate you saying it. Listen, I just
but
being true to myself.
Look how you came out of it. Your brand survived because you told the truth. And everybody that talked about you, because you were like, I had 50 calls a day about you saying, can you believe this guy? And I said, yeah, do you not believe what he's saying? I mean, he's really telling it the way it is. And I mean, you got to admire the crap he's going through. But I think you came out of it better than a lot of other people that were trying to somehow distance themselves in different ways from that period of time. And I think you've survived very well.
Well, I like this knife, especially coming from you, who's been in the blast furnace alongside of me on certain occasions. That's very sweet of you to say. But like you, I just said what I felt. I think I was exonerated certainly about Steve Bannon. I mean, the guy definitely went off the reservation. We don't have to talk about him here because I want to stay on your books and your achievements. What is the thing that you're most proud of? And your kids are amazing. I've had the opportunity to meet them, but I'm talking about professionally. Like you say, okay, wow, I was so happy that I was able to do that. For me, I'll just tell you, I thought I was going out of business in 2008. I thought Skybridge was going out of business. Certainly felt that way. And we made a couple of moves, and some of it was lucky, and some of it was smart, and it was good timing, but we were able to save the business, and the business went on to thrive. So it was an adapt and pivot in 2008 for me. What was it for you? What do you look back and say, okay, wow, that was a good situation?
You know, I go back to the decades that I've been a venture capitalist and supporting entrepreneurial drive, and identifying people that have that they're willing to take those risks and take that journey, and I invest in them. It doesn't always work out, but what I really enjoy is you know, giving, because I've been there before, and I think the one way to give back is to go back to those people and say, look, I've done what you've done, and I know where the potholes are, and I would love to invest in you and give you some mentoring and see if we can't be successful. I love engaging with them, and I've got this great team I work with, and I hire very, very slowly, and I fire very quickly because I like to keep my team very intact. But I just get energy out of it. I mean, it's not work for me. I enjoy everything I do every day. But what I find so intriguing is what I've really learned is people think in business, and this is the one lesson I've learned, that you have to like everybody you do business with. That's not true. You have to keep your friends and family different than your business relationships, because some of my most successful deals are deals where I invested in real assholes that nobody likes. I like them because they're good at executional skills. Maybe you don't like their personality, but they have great executional skills. And, you know, nobody likes these people. And so we hate the guy. We had a meeting with him. He's terrible. I said, wait a second, that sounds like my kind of guy. Let's go meet him. Let's go sit down and find out what he's achieved and why he's there's. I would bet you a third of the companies I'm an investor in, my team hates the CEO for whatever reason. But I love them because they have executional skills and milestones. That's one thing that I've really enjoyed. And the other thing for me is it blown me away over, now it's 15 years and I have 7 years worth of data, that almost 80% of my returns have come from companies run by women. And I'm not into this gender warfare crap. I don't care about that. I'm just talking about the outcomes. So I'm very biased in investing in these really strong matriarchal kind of women that just have, real, they're just different. They're just different. And they have made me so much money. And so it's the outcome I care about. And so I'm very, very biased. You look at my deal flow now, you find these extraordinary women with very aggressive personalities. And, I love that stuff. And that I'm very proud of that. I'm very proud of that stat. And so when I hear initiatives from, entrepreneurial groups or venture funds that are saying, we want to tap in your deal flow with women, I'm all for it. And, but it's not about this, gender neutrality thing. It's about executional skills. And when people say to me, well, you can't say that, I say, yes, I say that. Yes, I invest to make money. That's why I invest. I'm not trying to save the planet. I'm trying to save the money. People give me money to invest. I want to make sure it gets returned. I'm happy to save the planet, and I'm a kumbaya guy, but I need executional skills, and I get that from women.
All right, it's my last question, but I want you to think about it. Okay, so it's a Kevin O'Leary, Anthony Scaramucci sort of question. Okay, you have probably the most infectious laugh of anybody I've ever met. Like when you're laughing, you are really laughing. We were at an event together when Jimmy Kimmel was lighting up the house, and I saw you with your head back, really laughing. You have this amazing sense of humor. Okay, how and why? How did you develop that? When do you deploy it? And you even have it about yourself. I mean, it is, the rumor is that you came up with the name Mr. Wonderful. Herkovec told me that. And then when he said, nobody calls you Mr. Wonderful. And you said, you just did.
It's probably true. We're trying to find the origins of that, but I like to say that facetiously because Barbara is always on Shark Tank. I've been working with those people now for 14 years, and Barbara's always busting me about my royalty deals and all this crap, and I just love to take it all in. And she's a great cook, by the way, and we're very good friends. When I'm in New York, we often get together. She does a great job cooking. But, it's sort of like, I think if you can't laugh at yourself and you can't find some humor, because life is so full of drama and bad moments, it's sort of like, here's a typical day, and today included, okay? I've got a lot of deals, over 50 of them. And each day is a passion play. It starts with, like today, 3 calls about the year is really starting today. Today is the first all-in day where the lawyers are back and the bankers are back and everything's back.
Right. Yeah.
First 3 calls of the day, it's some tragedy occurring in one of my companies. They think they're going to go bankrupt. It's tied to the crypto space. They're down 80%. And it's just chaos. And, it's all bad news and everybody's miserable. And then 20 minutes after that, I get a call in another company that just scored a massive deal in distribution. I mean, it's going to triple their business. And so it goes from like chaos to euphoria. It's like, it's all in the same hour. And I say to myself, well, okay, well, how about that? Do they cancel each other out? Or how do I look at that? Should I be miserable from what I'm about to lose over there? Or happy about what I'm going to make over here? Or maybe it's just one big passion play and you got to take it all in and just realize there's a path to being happy somehow. I love this idea of being happy. And happiness, I don't know, people are talking about this, is about relationships with people.
No
and
question.
if you have great relationships, there's no reason you can't be happy. There's lots of reasons to be miserable. I get that, but I don't want to be miserable. I'd rather be happy. And I don't need any more money, so that's not going to be the measure of my happiness. I need more time, and I want to have fun, and I want to do stuff that I like. And and I get to do that now. And if I don't know. And so if laughing, I love it. If we can have some fun, that's a great thing. There's no question about that. There's something that both of us consider. Somebody asked me the other day, and I want you to think about this too and give me the answer to this. All these years on television and all the crap you've gone through because of it, if you could start all over again, would you like to be more private? Do you wish you'd never done this? I know my answer, but I want to hear yours first.
No. This has been the greatest silver lining of my life. First of all, if I didn't have a high profile, I wouldn't know you, Kevin. Honestly, I don't think we would have connected because we connected in those circles. I've gotten to do reality television. I was on Special Forces this past week. It had 18 million viewers. I have been all over the world speaking. I've been blessed with unique relationships and friendships. I couldn't do this podcast if I didn't have a high profile. So for all of those reasons, yes, there is a sting to it. I get snark. Sometimes I've gotten death threats. Sometimes I feel that it's been unfair to my children. But by and large, I would take the whole enchilada again. What about you?
Yeah, I am 100% with you. And when I have this discussion with my family that say, particularly during the periods of controversy and,
Sure,
all of these things.
Oh, the FTX thing sucked.
Yeah. I mean, what a shitstorm. I mean, it was just unbelievable. But I say to them, look, if you look at the cycle of media today, and I've been totally transparent on all of these situations and just tell them what I know and, dealing with the authorities and all the rest on it. It's sort of like, you got to take that in. It's part of the cost.
It is.
But I go back to my thing. If you want freedom of speech, if you want to have an open society and you want to explore ideas that even you don't like, the lunatic fringe has a voice too, and they always will. And so just get over it. And, it's all of that stuff is just noise.
I'm with you. And, Trump, despite the fact him and I are sparring today, he said two things to me that I'll share, which I think are relevant. Number one, he said, hey, listen, if there's 300 million people in the country, 150 million people hate my guts. He said, but what about the other 150 million people that love me? Just imagine the things you can do. Okay. And his point was, you got 150 million people that love you. Let's go with that side of it. Okay. The second thing he said to me, I think I got beat up. Reince Priebus was like dropping like Oppo research on me in the first couple of weeks of the transition. He really didn't like me for whatever reason. I think because I was a New Yorker and Trump was a New Yorker. And Trump called me, said, wow, that was a really nasty article about you. He said, well, let me tell you something. He said, in about 2 weeks, they'll be writing a nasty article about somebody else, and no one will even remember the nasty article that was written about you. And I thought about that. He's by and large right, Kev. You got to tell your family that.
I think the thing
goes
that I
by
think
the wayside,
The politicians of today are learning something very quickly in the last year, I would say. It's no longer just about politics. You got to have some policy too. You got to bring policy to the table because all of this politics is, at the end of the day, boring. Like these infights and these crazy sessions, and people get tired of this crap. They want to see the output. I don't care who you are, what side of the fence you're on. Just bring policy forward, and then let people decide if it's good policy or bad policy. I thought Trump had good policy on small business during his tenure. And a lot of people tried to tie that to the politics. The truth is, small business did very well during his reign. And now as we overregulate it again, it's not going to do so well. That's my take on it. And I don't know who the next policymaker on small business is going to be. For me, I'm very thankful that we're in total gridlock in Washington. I love that.
Yeah.
I say take an 18-month breather. Let's get nothing done. That's okay. And let's pick it up on the other side.
I agree with you on that. All right, so I've got 5 words. This will take 40 seconds. I'm going to say the word, and then you're going to say a word. I'm going to play word ping pong. I'm going to say a word. The first thing comes to your mind, you say back to me. Okay, you ready?
Yep.
Gullible.
I want to think about that.
You want me to come back?
No. I think it's a very good question. I don't want to peg it on one person. I want to peg it on a sector. Green activists.
Green activist, gullible. Okay, good. All right, passionate.
Green activists.
Okay, I say Italian when I hear that word passionate. Right, but let's keep going. Okay, you could be Lebanese though too, by the way.
Yeah.
A lot of people don't know your Lebanese background. All right, ruthless.
Mr. Wonderful.
That was 2 words, Kevin. I'm kidding.
They
Greedy.
really should be together, though.
They should
really
be. They should be. It should be one. It should be the syllables combined. Mr.
Yeah.
Wonderful. Greedy.
Politicians.
Interesting. It's interesting. I say when I hear greedy, I think short-sighted. I want to be long-term greedy. Persuasive.
Storytellers.
Hey, it's very good. All right, so I've got Barbara Corcoran. She's going to come on in a few weeks. I need you to leave me with a question that I can ask her that will fire her up, because we know she can be fired up. Let's just put it that way. So what am I going to say?
Look, you have to ask her this question because, every speaking
I love her,
gig
by the way. But
no, I love her too. We are very good friends, and she will admit that. And we talk all the time. We're always texting about stuff. However, wherever I go, in these speaking gigs I do all around the world, it's a lot in financial services, but people always ask me, what's going on with you and Barbara? And I always say this, and it works every time, and it has for 15 years. The only reason Barbara gets to the Shark Tank set on time each year is I buy her a new broom. So if you ask her, what does Kevin get you each year to make sure you're on time on Shark Tank, she'll go out of her mind.
All right, I got to talk to the FCC on that one. I'll be back to you, see if I can get away with it. I'm kidding. Kevin O'Leary, somebody I consider a dear friend, is somebody I look up to. I will tell you that. I think you are a role model for people. Before we met, one of my kids said to me, do you know Mr. Wonderful? I said, you mean Kevin O'Leary on Shark Tank? He said, yeah, I would love to meet Mr. Wonderful someday. And then the good fortunes of life put us together. And my kids think the world of you, Kevin. You are the author of 3 best-selling books: Cold Hard Truth, Men, Women, and Money, Family, Kids, and Money. And you are the chairman of O'Leary Ventures, and you are Shark Tank's Mr., and that's one word, Mr. Wonderful. Thank you so much for joining Open Book.
I really enjoyed it. I always love these sessions with you. This is absolutely fantastic. I will see you soon, hopefully in Miami and New York. I will be in both places for quite a bit of time. So let's catch up again.
Let's get to dinner when I'm down. I'm going to be down in Miami on the 26th to the 31st. If you're down there,
I'll be here. I'll see you here.
Okay. All right. Love you, man. Thank you for doing this with us. You're phenomenal. This is great.
Take care. Thanks.
All right. God bless, Kev.
What is wealth? To me, wealth is health. Does money convey some sense of security? Of course it does. Just seeking money for money is not the answer. So you have to understand what's important to you about money. What are your prospects for generating money? What kind of time preferences have you selected? Do you want to save more or spend more? Have you thought through that? So you have to think through that. And the reality is, and you know this very well, that if you start early, you don't have to put a lot of money aside to have a whole bunch of money in 30 or 40 or 50 years. And you don't have to be a hedge fund manager to make a lot of money. You can do it just by investing in the market.
I haven't met Warren Buffett many times, but he said something to me about 20 years ago that has rung true in my life and has rung true in investing for me. Sometimes the best thing to do is absolutely nothing. We have all of these impulses in our personalities where, oh, I'm getting paid this big fee, and so let me go out and do something for my clients as a result of this fee. Okay, so joining us now on Open Book is Andrew Perillo. He's a dear friend, institutional investor. He's an author and speaker, and he's out with a new book, Beat the Wealth Management Hustle. Invest independently to grow savings faster with peace of mind. So, wow, that's a mouthful because you and I have been in wealth management. I think you and I are like Donald Trump and Joe Biden of wealth management. We're 2 ancient fossils in the industry. And there's a lot of things that are great about the industry, a lot of things not so great about the industry. You've written beautifully about all of this stuff. But let's start, Andrew, with your career. Tell us about your background, how you got started, why you've been doing this for so long.
Okay, great. Thanks. First of all, thanks for having me on. This is really an honor to be with such an august host here. I appreciate it.
August, yeah. Emphasis on the word august.
Icon of inspiration, especially with your partner, Katie, or Caddy, I should say. But anyway, okay, how did I get started? Well, look, I went to Boston University. I'm from Rhode Island. Went to Boston University. did my military obligation, Air Force navigator, got out, went to a bank training program. They put me in the investment department back in the early '70s because I'm really ancient. You're just a child. But yeah, and then I just kind of it was I in those days. Investing was not a really popular career, so I didn't know any better. I didn't know anything about stocks or bonds. I learned, and I guess I learned well enough because then I was attracted to eventually at the age of 31 manage the largest department or pension investment department of the largest bank in Rhode Island, which ultimately became part of Bank of America. And then in the early 80s, I went to an independent firm in Boston. And I had trouble with the ethics of that business. I, then switched to having managed money and having met with investors and fiduciaries, always fiduciaries, and rarely individuals. Although I did have some of the larger individual clients of the bank as clients, but. It was an interesting time. I mean, in the early '70s, interest rates went crazy. Interest rates by '81 were almost 16% on 20-year treasuries. And they went down to 55 basis points in August of 20. So we had the biggest bull market in history. Actually, not as big as the bull market in bonds in Japan before that. But anyway, so market history is fun for me. It's a big part of my life. I enjoy the competition. Anyway, in '95, I found myself in a position where, I really thought I could do a better job for clients on my own. So I started my own firm. And the name of the firm was Newport Capital Advisors. And I had endowment clients. They were referrals. I was charmed in my life. I never had to go out soliciting business. People came to me. They knew who I was. They liked me. And so they trusted me and they hired me. And why did they do that? Well, I can only attribute it to, and I talk about this in the book, I thought independently. I was different from the crowd. I wasn't on the well-worn institutional path of hiring the big famous, firms. I was like, no, let me find the people who are poor, driven, and hungry. Kind of a Mario Gabelli thing. Although I never actually engaged Mario's firm, but anyway, another story. But we probably know a lot of the same people. We've had the same experiences. But the bottom line of this all is, by the end of 2019, after 25 years of owning my own firm, and we had endowment clients and family offices as clients, and I had a small hedge fund of funds, a multi-strategy fund, and which was interesting and a learning experience. And by the end of 19, I was getting a little tired of it, and so I closed the firm. And I tried retirement for a couple of years, and I got super bored. And in late 22, I was at a holiday party, and I didn't know anybody there. It was a friend of mine's house in New Hampshire, actually. And I introduced myself, and I said, well, I have 3 sons, 3 grandchildren. I retired from the investment business. And in December of 22, you may recall, I'm sure you do, that the market was down roughly 20% that year, and bonds were also down, depending on your duration, 15% or more. People were a little bit concerned. What should I do with my portfolio? So, thank you for asking. I said, but I'm not an advisor anymore. And do you have an advisor? Yeah, well, you probably should ask your advisor. I don't talk about investments casually in a social setting with people. But talk to your advisor. And then, well, what's the Fed going to do next week? Well, the Fed is probably going to do what it's been telling us since March of 22 that they're going to do, and that is raise interest rates until inflation begins to subside. But will it be enough of a change to change your portfolio strategy? I don't think so, but you should ask your advisor. All right. So that led me to an epiphany. It's like, wait a minute. Why are strangers asking somebody about what to do with their money? Don't they have advisors? Don't they talk to their advisors? And I started asking friends, who had advisors? Yeah, we have. Do you know how much you pay your advisor? Nope. And this was like a dozen people. They didn't know what they were paying their advisor. So, okay. And so that was my epiphany. And that was that's what really caused me to start to write the book. And what basically happens in the world in wealth, so-called wealth management, which is a term that I think is specious and pretentious, frankly, but it's investment management. But anyway, the let's face it, people, according to Daniel Kahneman, the late Daniel Kahneman, now people, and he won a Nobel Prize in economics as a psychologist in 2002, and wrote a book, Thinking Fast, Thinking Slow, which I commend to everybody. And it's people are 2.5 times more likely to avoid risk than to embrace the opportunity for gain. And Wall Street, I shouldn't say Wall Street, the so-called wealth management industry has done an expert job of exploiting that phenomenon or that tendency for people to avoid risk. So, and people go to wealth managers for comfort. They rarely ask them, how much they charge. I think they have no idea of what compound interest is, And here are the numbers, Anthony. I mean, there are no charts and graphs in my book. There are some numbers. The numbers are pretty, and my book is a simple book. It's a simple idea. Okay, there's nothing complicated about it. But we know that in the last 25 years, the world has changed so that accessibility of information, competition has increased. Prices in many cases have gone down a lot, especially driven by technology. And that's been true in the investment business, where now you can invest for little or no cost, really, and you can have a prudent portfolio with using the services of the major, custodial brokerage firms and banks, for little or no cost. And so, why are you paying somebody to do that? Because they don't think they're paying very much. Well, they know how much they pay their lawyer to put together a will and a trust and other agreements they need for their business or their family planning. They know how much they pay their CPA, but they don't have a clue about how much they're paying their advisors. And that's just a fact. And it's a multi-trillion-dollar industry that's charging hundreds of billions of dollars a year in fees. And most people have no idea whether they're getting value from the fees that they pay. And that's as simple as I can put it. And so my book is about, disclosure, transparency. It has some questions. It advocates to people that they look at their investment process the way institutions look at investing their own money, and that is to conduct, due diligence. It's not rocket science. It's common sense questions. And I'm not that smart. I just have been around for a while and I've seen stuff. And you can't time the market.
Let's go over some mistakes. So that's one of them. You can't time the market. Number two, if you overly listen to people on the pundits, you may move your portfolio pursuant to Federal Reserve interest rates moves. That's also probably not a good idea. Fees matter, right? Lower fees, higher returns over long periods of time. Tell us some other mistakes that people make. Let's say you did run into somebody at one of these cocktail parties and you said, okay, here are 5 or 6 things you should do with your money, which will be better for you and your family. Tell us what those are.
Well, 5 or 6 things is to, first of all, understand what is important to you about money. That's the first thing. It's really like a value-based, query. What's important to you about money? One of the things I talk about in the book, firstly, is what is wealth? Well, to me, wealth is health. And does money convey some sense of security? Of course it does. But just seeking money for money is not the answer. So you have to understand what's important to you about money. Do you, can you, and then what are your prospects for generating money? What kind of time preferences have you selected? Do you want to save more or spend more? Have you thought through that? So you have to think through that. Time preference for money is super important. And the reality is, and you know this very well, that if you start early, you don't have to put a lot of money aside to have a whole bunch of money in 30 or 40 or 50 years. And you don't have to be, a hedge fund manager to make a lot of money. You can do it just by investing in the market.
When you were a kid, Andrew, did you ever read The Richest Man in Babylon?
I have not, unfortunately. I'm not as well read as you, Anthony. No.
Your book is a lot like that. That's the reason why I was asking, because your book is it's a very, very straightforward thing. I've ordered a bunch of them, and I'm trying to get them into as many hands as possible, because I just think it's a beautiful guidepost. But I'm gonna bring you on the Wealthy On Network, which is another show that I do called Speak Up, where registered investment advisors actually tune into this show. And so, if you were a registered investment advisor and they read your book, and a lot of people are cynical about wealth management, and a lot of the stuff you say in the book is true, but how put me in the seat of the registered investment advisor. How do I make myself valuable to somebody after reading your book?
Yeah. Okay. Here's my approach. My approach, and this is what I used at my firm. First of all, behavioral finance is really a big deal. Okay, because human behavior changes over time, but the pattern is roughly similar. Okay, and so the reaction to market events, which are, sometimes, surprising and chaotic, tend to follow a path. I mean, the reality is that, let's just talk about the standard of corporate performance for 100 years has been the Standard & Poor's 500, okay? And it's gone up roughly 10% a year. 3 years during the Depression, the Great Depression, it was down 85%. It was down 50% for the 2.5 years of dot-com decline. It was down a year and a half, but it was down 50% for a year and a half during the Great Financial Crisis. It was down, it was down 35% in 30 days in the COVID crisis, okay? But it's always come back. Why has it come back? It's because corporate managements are incented to provide a return to their shareholders, and if they do not, they're out of business, and people will go on to the next, company. And I don't expect that to change. And yes, inflation rates have changed. The value of the dollar has been destroyed particularly since we suspended convertibility of gold in 1971. And I'm not a gold bug. I've never thought that gold was a good investment. But anyway, however, I do think Bitcoin is a different proposition. It is a good investment, but that's a different, level of thing. What would I tell advisors? I would tell advisors, focus on allowing the client to determine his or her own preference for risk and return. And I use something that's based on prospect theory, which is an objective way to determine somebody's tolerance for risk and return. So it asks a series of iterative questions. And the questions are, okay, how do you feel about possibly making, and this again is using what we know as mean variance analysis, but it's basically using history as a guide to what may happen in the future in the market, which has been pretty reliable. So looking over a 6-month interval, would you be comfortable making 20 or losing 12? Well, I don't want to lose 12%, but how about making 15 and losing maybe 8? Well, that sounds a little better. And so you could actually quantify those preferences with a risk score. And for what it's worth, the Standard & Poor's 500 has a risk score of about 75 on a scale of 0 to 99. And and most people have a lot more risk in their lives and in their portfolios than they even know. So one of the things you could do as an advisor is say, let's take a look at your portfolio and see how it scores and see if it comports with your own preference for risk and return by using that score that we've just determined iteratively and objectively. So it's not like, well, you're a 60-year-old man, Anthony, so you must be relatively conservative in your investing. Well, the reality is that no, surveys have shown that people who are under 30, half the people under 30 are just as conservative as half the people over 70. Okay. And that's just a fact. So it's a very subjective saying, well, I'm growth oriented, I'm risk oriented, I'm conservative, I'm capital preservation oriented. That doesn't mean anything. Those are subjective terms. And I think that they should be quantified objectively. And therefore you could review them and you could calibrate a portfolio to that risk score. And that's what I would suggest that advisors do. The other thing I would suggest that advisors do is be very transparent on how much they have charged their clients over what interval from beginning to end. One of the things that happens in our business is every minute you get throughout the day, you'll get a notice on your mobile device that you have a charge against your card or your bank account or something, right? You get those notices. Do you get a notice every quarter when your advisor charges you their management fee? No. The fee comes out of the custody account. People don't even see it. They don't read the custody accounts anyway. Until and unless the market goes down a lot and they get freaked out. And where do the advisors make their money? They make their money by setting the appropriate strategy and risk profile for each client, and then revisiting that on a systematic basis, probably at least a couple of times a year, but at least annually. And so that's what I would tell advisors to do. And I would also encourage advisors to charge their fees on a fair basis. Now, you and I both know that the margins in the investment management business are really high. What a great business. You get a client that has recurring fees. They're going to grow in line with the market, which again is roughly 10% a year. Call it 8%, call it 7%, still doubles in 10 years. And so you have this stream of revenue that's growing at 7% a year. It's a value because it has a residual value, because you could put a number on that and sell it to somebody, to a larger firm that wants to buy your book of business, so-called. And it's a great business. And oh, by the way, it takes almost zero capital to be in the business. Right? It's probably one of the most attractive businesses I can think of that's legal. And the only reason it's legal is because the SEC is so permissive. And people don't even know that fees by the SEC's mandate are negotiable. That doesn't mean the manager is going to lower the fees, but all management fees are negotiable. And people don't even know that. So it's trying to just enlighten people to look. Let me. I said before I have some numbers, and I know we don't have a lot of time left, but okay. So let's say you have $500,000, and you have an advisor who makes 7% a year for 20 years, and they charge you 1% a year, which is generally the management fee that people charge. It might be a little less. It might even be more. It frequently is. All right. So how much does that amount to? Well, that fee, that 1% over 20 years, amounts to $331,000. So if you want to put your $500,000 out there to an advisor at 1%, and you don't mind paying them $331,000 over 20 years, great. That's your choice. But you should go into that with your eyes open. Could you do that yourself for almost no fee, for a few basis points, for a few 1/100ths of 1%? The answer is yes. So all I'm saying is what Warren Buffett and the late Jack Bogle have said for years, and that is, just invest in the S&P 500 and forget about it. And just you cannot deal with the noise of Wall Street on a day-to-day or week-to-week basis, because it will drive you bananas. Yeah. Right? You won't know what to do. And, you'll hear these talking heads. And that's another thing I talk about in the book, but there's not time to go into it here. But the people who get interviewed on the daily financial shows are talking about what's going to happen next week in the market. I don't know. And I know there are a few people who can actually time the market, but it's
definitely not me, Andrew. I can tell you that.
No, not you. But I'm saying there are some people who are good at that, but you could count them on maybe two hands. All right, and they're not accessible. They're closed to. They're brilliant investors. Absolutely, they're savants. Really, is what they are. But
I'm going to say something to you, and I want you to react to it. I feel I get paid as an investment advisor or as a manager to do nothing. And you say, well, what are you talking about? What do you mean to do nothing? Well, I have set up a portfolio. And if I can condition my clients to listen to me and take the long-term approach with the portfolio that I have set up. I haven't met Warren Buffett many times, but he said something to me about 20 years ago that has rung true in my life and has rung true in investing for me. Sometimes the best thing to do is absolutely nothing. And we have all of these impulses in our personalities where, well, I'm getting paid this big fee, and so let me go out and do something for my clients as a result of this fee. So what's your reaction to that? Because I really think that's when I talk to my clients, they're like, where you've added value, Anthony, you've kept me on the ledge. You kept me from jumping off the ledge, going to cash at the worst possible times, etc.
And that is precisely the right way to look at it. And that's exactly the right. And look, I've been through a lot of crashes. I've been around this industry for 50 years. I know and I've been through it with real people. And I've seen how difficult it is. It's terrifying when you lose 50% of the value of your money or more. But in every case, it's come back. And of course, the advice has been, yes, Stay with the program. Do not sell at the bottom. Do not try to reduce risk, because what you're really doing, if you sell out after you lose, you're not reducing risk. You're actually increasing the risk that you will not succeed. And so, that advice about doing nothing is exactly the right advice. My point is, why are you paying somebody an annual asset-based fee, and you're paying them every day of the year, that fee, by the way, to tell you every time the market goes down, 10 or 15 or 20% or more, to just stay the course, stay put. Maybe we'll rebalance a little bit. But, does your advisor make changes on a daily basis to your portfolio? No. And if they do, they're probably not very tax efficient, or for that matter, investment efficient. It's just not necessary to do that. Warren Buffett's favorite holding period is forever. And that's good advice. Now, if you hold on to something that's fundamentally deteriorating, that's kind of dumb. You can't do that. But if you've spread your risk among, say an index of stocks like the broad index that Vanguard has, or the S&P 500, you're going to get the decisions of. And oh, by the way, many investment managers, and you know this as well as I do, have gotten rich underperforming the S&P 500. I mean, they literally have gotten. Why is that? Are they making money for themselves, or are they making money for their clients? So I think
listen, I'm with you. That's why I wanted to bring you on. So we're at the point in the podcast where my staff and we put together 5 words that are tied to your book. And so I'm going to say the word, and then you're going to say to me what you think of. It could be a sentence, it could be a word, it could be a few thoughts. Okay, you ready?
Yeah.
When I say the word money, Andrew, you think of what?
I think of confusion.
Okay, it's interesting. It's a good point. How about the word success?
Achievement.
How about when I say hustle?
Let's see. Resolute energy.
Wealth.
Health.
Boy, isn't that the truth? When we're kids, we don't think of it that way, right? But what do we think about that as we get older? That it's really just the health is the wealth. Last word, investing.
Joy.
Well, it has been. It's been for me too. I mean, this has been the best business I could have gone into. Is this business? It's just the business of understanding other businesses. If you like business, what could be better than that? Who's going to win the election?
Question, Whitmer.
You think so? All right. So
Anthony, listen. What's going on?
If they replace Biden, say it again. Say it.
Yeah, most of the people in the country do not want either Biden or Trump to be running for president.
Right.
This is the most absurd situation that I can imagine. Okay, that I could have even dreamt of. Okay,
it's very true.
In this country right now, and poor Joe Biden. I feel so bad for the guy. He's been a terrific president. He's had an unprecedented successful term as president.
He's been a better president than Obama. He was less dramatic, less. Obama was no drama. Obama, that wasn't the case, though.
Well, absolutely. I mean, the man has been one of the most successful presidents in history. Unfortunately, his cognitive abilities have declined, and they've hidden that from us until 3 weeks ago when we saw it on display, and it's gotten worse since then. And I'm so sorry. I feel so bad. It's painful to listen to the poor man. I hope he steps aside with grace and dignity. There's still time for him to do that, although it is getting late for him to do it with dignity and grace. The country needs to be reinvigorated with two candidates or at least one candidate that has not been around for 9 years or more. Okay, Biden's been around 50 years. The other guy's been around 9 years.
Yeah.
I mean, it's getting kind of old. And what can I say? I mean, I could go on, but I listen to you. I'm totally on board with what you've been saying on your broadcasts, and both on investments and on politics, frankly. And I think, again, you're an inspiration. You're an icon of your generation, and you deserve a hell of a lot more visibility than I think you're getting.
Well, it's very sweet of you. I appreciate it. I'm a huge fan. I'm going to bring you on the Wealthy On show as well. I think you're going to really enjoy that.
Thank you.
We take questions from the audience. So the title of the book is Beat the wealth management hustle. Invest independently to grow savings faster with peace of mind. I was very proud to write the foreword to this book. It's written by Andrew Perillo. Thank you so much for joining us today on Open Book.
Thanks, Anthony. Take care.
My next guest is a fellow Italian American. His name is Andrew Perillo, and he's a wealth manager. And he was he started out as a stockbroker, but now he's sort of an asset allocator. Okay. Which I've been for the last 30 years, Ma, but for some reason you wanted to be a lawyer, right?
Well, in my generation, a lawyer was like a status symbol, like in society.
Mm-hmm.
Today, it's more common. What you are is even better because you're very successful because you like doing what you're doing. But not only that, you share your wealth.
Mm-hmm.
I mean, you definitely have made me survive. I mean, let's say it the way it is.
But let me ask you this question though, Ma. Did you tell your friends that Goldman Sachs was a law firm? Yes or no?
Not really, but
you
I
you
tell
did.
them that you
You
were.
did.
No,
You did.
I
You're
told them
revising
that you went to
history.
Harvard Law School
Oh, did you tell them I
because
was a
you're a famous
lawyer at Goldman Sachs? Go ahead. You know you did because I ran into somebody at Rosano's Deli, and you see, you know you did. You know you did, and you said, "Oh, my son's a lawyer," and they said, how's the law firm Goldman and Sachs?" I'm like, "Oh my God!" First of all, it wasn't even called that. You trying to deny that you did that to me?
Well, it was many years ago, and I'm going to be 88, so I'm not.
So you get away with it. It's okay. No. You can get away with it. It's all good. I thought it was funny, but you made me take the bar exam. Do you remember that?
Absolutely.
Yeah.
I mean, you can't go to Harvard Law and not pass the bar and not become a lawyer, have a law degree.
All right, so I did that for you, Mom.
Use it or not use
you
it.
drove me
it's a good thing to have.
Never used it once. You drove me crazy. I went and passed the exam so you could come to the swearing in ceremony. But if I was a lawyer, I would have stabbed out one of my eyeballs with a butter knife. Come on, Mom. Right? Don't you think you should do what you love?
I think you should do what you love to do. Yes, because that's why you're successful at it. You love it. You love the challenge you love the challenge and you love the camaraderie of the whole atmosphere of what you're in. You're very good at it, and your success and your abilities to build beautiful homes and take care of your
Nothing
family.
like a mom. All right, Ma. All right. Nothing like a mom to bring around the podcast. Okay.